Eleanor is 73 years old. 3 weeks ago, she opened her mailbox and found a letter from the Social Security Administration. Her monthly check reduced from $1,172 to $1,231. $441 gone, effective immediately. Eleanor didn't make a mistake. She reported her earnings. She followed every rule. But 3 weeks ago, Social Security told her she owed $38,000, and if she didn't pay, they'd take everything. And here's the part that should terrify you. In March 2025, the Social Security Administration quietly changed the rules. They can now withhold 100% of your monthly benefit, your entire check, until the debt is paid. Today, I'm going to tell you about 3 people. Eleanor, who's about to lose her home. Arthur, who got $0 for 4 months. And Susan, who avoided this nightmare by doing 3 simple things I'm going to show you today. But first, you need to understand what happened in March 2025 and why it's going to trigger a wave of Social Security overpayments that nobody's talking about yet. Let me start with something everyone should know, but almost nobody does. On March 27, 2025, the Social Security Administration reinstated a policy that allows withholding of up to 100% of monthly benefits to recover overpayments. This isn't conspiracy theory. It's documented on the official SSA website in communications from March 2025. Before this change, since 2024, the SSA had a temporary policy that limited withholding to just 10% of the monthly benefit. It was a protection. If you owed $20,000, they'd take about $200 per month until paid off. But in March 2025, that protection ended. For new overpayment cases identified after March 27th, the SSA can, and has, withheld 100% of benefits until the debt is recovered. Now there's one important exception. SSI beneficiaries, supplemental security income, still have the 10% protection. But if you receive regular Social Security retirement, the 100% rule applies to you. Why did they do this? According to official documents, the SSA needs to recover approximately $7 billion in overpayments over the next decade. And they decided the most efficient way was to return to the old policy of full withholding. The problem? This policy assumes every overpayment is the beneficiary's fault. And as you'll see with Eleanor, Arthur, and Susan, that's far from the truth. Now let's talk about the good news everyone's celebrating. According to the official Social Security Administration announcement from October 2024, benefits will increase 2.5% in 2026. That's COLA, cost of living adjustment. But wait, you might be thinking, I heard 2.8%. And you're right. There are 2 numbers circulating. The official COLA announced in October 2024 was 2.5% starting January 2026. But more recent projections, based on updated inflation data, indicate the actual adjustment could reach 2.8%. Let's work with the conservative official number of 2.5%. For someone receiving $1,800 per month, that's a $45 increase. Sounds good, right? Here's the problem. That $45 increase could completely disappear, or even leave you with less money than before. How 3 hidden traps that catch thousands of seniors every year. Every year, Medicare Part B premiums increase, and historically, these increases often match or exceed the Social Security COLA. In 2024, the standard Part B premium was $174.70. For 2025, it rose to approximately $185. That's about a $10 per month increase. So that $45 COLA raise, Medicare already took $10. You're left with $35. But there's more. If you're in a higher income bracket, you pay IRMAA, Income-Related Monthly Adjustment Amount. It's an additional premium adjustment based on your income from 2 years ago. For 2026, IRMAA is calculated based on your 2024 income. If you earned more than $106,000 as an individual or $212,000 as a couple, you pay more. And IRMAA levels for 2026 can easily add $100, $200, even $300 extra per month to your Medicare premium. Result: that $45 COLA increase doesn't just disappear. You could end up paying more in the end. If you're collecting Social Security before your full retirement age, FRA, and you're still working, there's a limit on how much you can earn. In 2026, that limit is $23,400 per year. If you earn more than that, Social Security reduces your benefit by $1 for every $2 you earn over the limit. Now, if you're reaching full retirement age in 2026, there's a higher limit, $64,800 per year, applied only to months before you reach FRA. Here's the problem most seniors don't know. Social Security doesn't adjust your benefit based on phone calls. They adjust based on IRS data that comes from your employer, and if your employer delays filing the W-2, you keep receiving full benefits for years until the data finally arrives. And then, boom, overpayment, instant debt. The Social Security Administration runs on old computer systems. Some components are decades old. When errors are entered into the system, it doesn't cross-check with scanned documents. It just does the math. Wrong birth date? System approves. Earnings applied to the wrong person? System approves. And when the error is discovered, years later, you pay the price. Now let me tell you Eleanor's complete story. Eleanor worked for 41 years, paid into Social Security her entire career, retired at 65 in 2017, and started collecting $1,372 per month. In 2018, her hours at a part-time grocery store job increased. Her annual earnings went from $14,000 to $24,000, over the Social Security limit. Eleanor did the right thing. She called Social Security, reported the increase. The agent said, "Okay, we've noted that in your file. Thank you for letting us know." And nothing happened. Eleanor kept receiving $1,372 every month for 8 years. No reduction, no warning. Until 3 weeks ago when this letter arrived. Your benefit is being reduced to $1,231. You were overpaid $38,000 over the past 8 years, effective immediately. Eleanor's rent is $950, utilities $180, medications $290. Her new benefit, $1,431. She's $675 short every month. And Social Security wants $38,000 back. Money she doesn't have. Money she already spent on rent, food, and medicine. So what did Eleanor do wrong? Absolutely nothing. Her employer filed W-2 earnings data 6 years late. Eleanor reported her income verbally, but Social Security doesn't adjust your benefit based on phone calls. They adjust it based on IRS data from your employer. And when that data finally arrived in 2024, Social Security went back 8 years, recalculated everything, and sent Eleanor a bill for $38,000. Now, here's where the March 2025 policy makes this 1,000 times worse. Before March 2025, if Social Security discovered an overpayment, they'd offer you a repayment plan, maybe $50 a month. You could negotiate, you could appeal, you had options. Under the new 2025 policy, they can withhold your entire monthly check until the debt is paid. And in some cases, especially when there's suspected lack of cooperation, that's exactly what happens. Let me introduce you to Arthur, and you need to pay close attention, because Arthur's situation shows you exactly how bad this can get. Arthur is 68 years old. He retired at 62 in 2020 and started collecting Social Security. His benefit, $2,100 per month. No issues for 5 years. December 2024, Arthur gets a letter. It says that in 2019, the year before he retired, He earned $78,000 from his job, and according to Social Security's records, he'd already started collecting retirement benefits in 2019 at age 61. Arthur was confused. He didn't start collecting until 2020 when he was 62. He called Social Security. "Sir, our records show you were born in 1958. That means you turned 62 in 2020, not 2019. If you applied in 2019, you were only 61. It turns out Social Security had entered Arthur's birth date wrong. They typed 1957 instead of 1958. The system approved his application, thinking he was 62, when he was actually 61. Social Security paid Arthur for 5 years based on their mistake. And then in January 2025, they sent him this. You were overpaid $2,200. We are withholding your benefits to recover the overpayment. January benefit, 0. February, 0. March, 0. April, 0. 4 months. No Social Security income. Arthur couldn't pay his mortgage, couldn't buy food, had to borrow money from his son. Maxed out a credit card. And in April, Social Security sent him another letter. The overpayment has been recovered. Your benefits will resume in May. Oh, and by the way, we're also reducing your ongoing benefit by $190 per month. Because now that your birth date is corrected, your benefit calculation is different. Arthur did nothing wrong. Social Security made the error. They entered his birth date incorrectly. They approved his application, they paid him for 5 years, and then they punished him with 4 months of zero income. This is the new Social Security overpayment policy in action. And according to official SSA data, this is happening to thousands of people right now. Now I know what you're thinking. This won't happen to me. I'm not working. I reported everything correctly. Eleanor thought that too. So did Arthur. And they were both wrong. There are 3 situations that are triggering these overpayment disasters right now. And if you're in any of these 3 categories, you need to take action today. You're collecting Social Security benefits before your full retirement age, and you're working part-time, doing gig work or freelance work. If this is you, listen carefully. Do not assume your employer is reporting your earnings to Social Security on time. And do not assume Social Security is adjusting your benefit correctly. Here's what you do right now. 1. Go to SSA.gov. Log into your My Social Security account. 2. Click Review Your Earnings Record. 3. Check that your 2025 earnings are showing up. If they're not showing up, your employer may not have filed your W-2 yet. Contact Social Security immediately. Report your estimated earnings in writing, certified mail. Keep a copy. You're receiving Social Security disability benefits, and you've returned to work under a trial work period. Social Security allows people on disability to try working again for 9 months without losing benefits. But here's the problem. Social Security doesn't always track trial work periods correctly. There are documented cases where someone did a trial work period in 2019, went back on full disability in 2020, and then in 2025, Social Security claims they were overpaid for 6 years. If you've ever returned to work while on disability, even briefly, you need documentation showing when your trial work period started, when it ended, and what your earnings were. Get it in writing from Social Security, now. You're receiving survivor benefits or spousal benefits, and your own work earnings increased. This is complicated, so pay attention. If you're collecting benefits on someone else's record, like a deceased spouse or current spouse, and you start working and earning more, Social Security might reduce your benefit, but they might not do it right away. They might wait until your employer files earnings data, which could be years later. And when they finally get that data, boom, benefit reduction, overpayment demand. If you're collecting benefits on someone else's record and you're working, report your earnings to Social Security every single year, in writing, with documentation. Now, those are the 3 high-risk situations. But even if you're not in any of those categories, there are 5 actions you need to take right now to protect yourself. I know this sounds obvious, but remember Arthur. His entire nightmare happened because Social Security had his birth date wrong for 5 years. The system approved his application thinking he was 62 when he was actually 61. Social Security paid Arthur for 5 years based on their mistake. Go to SSA.gov, log into My Social Security, check your birth date. If it's wrong, contact Social Security immediately with your birth certificate. Get written confirmation that it was corrected. Log in to My Social Security. Click Review Your Earnings Record. Make sure all your past earnings are listed correctly. Check for gaps, check for errors, and pay special attention to the most recent year. If you worked in 2025, check in early 2026 to make sure your 2025 earnings are showing up. If they're not, your employer may not have filed yet. Report your earnings yourself. And here's something crucial many people don't know. Your reported earnings affect not just your current benefit, but also future benefit calculations. If a year of high earnings isn't recorded, you could be losing out on higher future benefits. If you're working while collecting benefits before full retirement age, report your earnings in writing every year. Do not rely on phone calls. Send Social Security a letter every January listing your estimated earnings for the previous year. Send it certified mail, keep a copy, get proof of delivery. This creates a paper trail. If Social Security later claims you didn't report, you have proof. And here's the exact format you should use in the letter. I, your name, Social Security number, XXXXXXXXXX. I'm reporting that my estimated earnings for the year were approximately me amount. I request that my benefit be adjusted accordingly. Attached is a copy of my most recent pay stub as documentation. Simple, direct, documented. If you receive any notice from Social Security about benefit changes or overpayments, appeal immediately. You have 60 days from the date of the notice to file an appeal. If you don't appeal within 60 days, the decision becomes final. You lose your right to challenge it. Most people don't appeal because they assume Social Security must be right. Don't assume that. Social Security makes errors constantly. Birth dates wrong, earnings misapplied, benefits calculated incorrectly. If you get a notice that doesn't make sense, appeal. You can file online at SSA.gov by phone or in person. Just do it within 60 days. And here's something important. When you appeal, in many cases, Social Security has to continue paying your benefit during review. This buys you time to gather documentation and prove your case. Social Security allows you to request a waiver of overpayment if you can show that it wasn't your fault and that repaying would cause financial hardship. Eleanor should have requested a waiver immediately. She reported her earnings. Her employer filed late, that's not her fault. And repaying $38,000 on a $1,400 monthly income is obvious financial hardship. If you request a waiver, Social Security has to stop withholding your benefits while they review your request. This buys you time. To request a waiver, file Form SSA 632. You can get it at ssa.gov or any Social Security office. Explain why the overpayment wasn't your fault. Attach financial documents showing your income and expenses, and be specific. Don't just write, "I can't afford it." Write, "My monthly income is $1,231. My monthly expenses are rent $950, utilities $180, medications $290, food $200, total $1,620. I'm $189 short every month. Repaying a $38,000 overpayment is impossible without losing my home." Specific numbers. clear documentation. This dramatically increases your approval chances. Now, let me tell you about Susan. Because Susan's story shows you what happens when you do everything right. Susan is 66 years old. She applied for Social Security at 65 in 2024. Her benefit, $1,900 per month. When she applied, she told the representative she was planning to work part-time at a bookstore. The representative said, "Okay, make sure you report your earnings." Susan didn't just report verbally. She went home and sent Social Security a letter. "I'm starting a part-time job at ABC Bookstore in April 2024. My estimated earnings for 2024 are $18,000. Please adjust my Social Security benefit accordingly." She sent it certified mail, kept a copy, got a return receipt. 4 months later, Susan checked her My Social Security account. Her 2024 earnings weren't showing up yet, so she called Social Security. She said, "I sent you a letter in March. I want to make sure my benefit is being adjusted correctly." The agent said they couldn't adjust based on estimated earnings. They had to wait for the employer to report actual earnings through the IRS. But here's what Susan did that saved her from becoming the next Eleanor. She asked, "Is there any way to reduce my benefit now based on my estimated earnings?" The agent said, "I can submit a request for a manual adjustment. It's proactive. If your actual earnings end up different, we'll correct it later." Susan said, "Yes, please do that." 2 months later, Susan's benefit was reduced from $1,900 to $1,912 per month. Exactly the right amount based on her estimated earnings. At the end of 2024, her employer filed her W-2. Her actual earnings, $1,780, slightly less than estimated. Social Security sent her a letter. Based on your actual earnings, you were slightly under-benefited. Here's a one-time payment of $43. No overpayment, no surprise letters, no financial disaster. Susan did 3 things right. 1. She reported her earnings in writing with proof of delivery. 2. She followed up to make sure her benefit was being adjusted. 3. She requested a proactive adjustment rather than waiting for her employer to file data. Susan protected herself, and because she protected herself, she avoided the nightmare that destroyed Eleanor and Arthur. Let me explain a bit more about IRMAA, because this can affect you even if you don't know it. IRMAA Income-Related Monthly Adjustment Amount is an additional cost to your Medicare Part B premium if your income from 2 years ago was above certain limits. For 2026, they're looking at your 2024 income. If you were single and earned more than $106,000, or married and earned more than $212,000, you pay IRMAA. And the amounts increase in tiers. The more you earned in 2024, the more you pay in 2026. The problem? Many people have 1 year of high income, maybe sold a house, withdrew a 401k, received an inheritance, and 2 years later are surprised with a much higher Medicare premium. If your income dropped significantly since 2024 because of retirement, divorce, death of spouse, or loss of income, you can appeal IRMAA. There's a specific form, SSA 44, to report a life-changing event. Let's make the earning limits for 2026 absolutely clear. If you're below full retirement age during all of 2026, you can earn up to $23,400. For every $2 above that, Social Security withholds $1 from your benefit. If you're reaching full retirement age during 2026, for months before you reach FRA, the limit is $64,800. For every $3 above that, Social Security withholds $1. Once you reach full retirement age, there's no more earnings limit. You can earn as much as you want without affecting your Social Security benefit. And here's something many people don't understand. The money Social Security withholds because of the earnings test isn't lost forever. When you reach full retirement age, they recalculate your benefit to credit back those months. But this only works if they know you were working. If they find out years later, overpayment. If you're the son or daughter of a senior receiving Social Security, you can do a lot to protect them. Many seniors don't know how to navigate the SSA Gov portal, don't know how to check earnings records, don't know how to file appeals, but you do. Or you can learn in 10 minutes. Today, sit down with your parents, help them create a My Social Security account if they don't have one. Check their birth date, check their earnings record, look for errors. If they're working part-time, help them write that letter reporting earnings. Send it certified mail for them. If they receive a letter from Social Security that doesn't make sense, don't let them ignore it. Help them appeal within 60 days. You protecting your parents now can prevent a financial disaster that will affect the entire family later. So, here's what you need to understand. Social Security is not your advocate. Social Security is a bureaucracy, and bureaucracies make errors. When they make errors, you are the one who suffers. Unless you catch the errors first. Eleanor trusted the system. She's moving into her daughter's living room at age 73. Arthur trusted the system. He went 4 months with 0 income. Susan didn't trust the system. She verified everything and she's fine. Be like Susan, not like Eleanor or Arthur. Now, I know this video was heavy, but I need you to do 3 things right now. 1. Go to SSA.gov today. Check your birth date. Check your earnings record. 2. If you're working while collecting benefits, report your earnings in writing. Certified mail. 3. Share this video with everyone you know who's collecting Social Security or planning to collect soon. Because most people have no idea this is happening. Most people think Social Security will warn them before there's a problem, and by the time they find out that's not true, it's too late. And if you are the son or daughter of a senior, do this for them today. They might not know how to navigate the SSA Gov portal, but you do. Protect their peace of mind. I researched this topic for hours. I cross-referenced with official SSA sources, Medicare data, public policy documents. And I'm bringing this to you because this information could save your financial life. The sources are in the description. The forms are linked below. And if you want me to make a follow-up video showing you exactly how to fill out that waiver request or how to appeal an overpayment decision, leave a comment and let me know. Subscribe if you haven't already, because I'm going to keep making videos like this as long as people need this information. Information the government should be giving you, but isn't.